It just dropped the 100,000 XRP call, and the internet is going crazy. It's crazy how much this one costs. No, this is not hopium. This is what takes place when real money starts to leak onto the blockchain. Do you think Bitcoin had a big run? XRP is about to change the way money works in a big way. You're in the front row this time. Let's begin right now. Jake walks out and makes the call right away. 50,000 to 100,000 XRP by 2030, he says. That's not even 5 years away. Sounds crazy, huh? The only way is if you're not paying attention. Here's how he thinks. Now things start to make sense. 80 to 500,000 of all real-world goods should have been tokenized by then. Take a moment to think about that. Everything from stocks and bonds to real estate, commodities, and even company debt is being turned into tokens and moved on-chain. And a price tag of $2 XRP won't do if they're using the XRP system. We're talking about money for building things. These things need a settlement layer when they go on-chain. Bitcoin isn't strong enough to handle it. Not fast enough. Ethereum is backed up. Once every 2 weeks, Solana's network goes down. But the XRP record was made just for this moment. Instant, flexible, and legal. The ideal link between decentralized trains, banks, and institutions. That's what it stands on. This is how money will flow in the future. And XRP is the DNA of the town. This part is now forgotten. Bitcoin began as $1 and reached $100,000, but it didn't do anything useful. Not at all. It wasn't real gold. XRP, on the other hand, is linked directly to the world's operating system. The thing that moves money around. Bitcoin caused a stir. XRP is what makes it work. That's the difference. And before we go into more detail about how everything fits together, please listen. The XRP Millionaire Blueprint Pro is a must-read for anyone who wants to get ahead of this wave and learn how the top 1% place themselves before the next rotation. The XRP Millionaire Blueprint and the Millionaire 100x stock formula are both inside. The Millionaire 100x stock formula explains how the world's richest investors think, act, and grow their money. You'll also get weekly XRP updates that are only available to you. These updates will help you think and plan like the top 1%. You'll get updates that make things clear before anyone else does. The link is in the note below that has been pinned. Do not miss that. All right, let's go ahead. Because ETFs are about to become the next big thing that will speed up the growth of XRP. It's 2025, and the next big thing in the market is the rise of spot ETFs that aren't Bitcoin. And can you guess who's coming next? XRP. These businesses are no longer waiting for the SEC to give them the go-ahead, especially since the government is still uncertain. They are only going to file an 8A instead. And after 20 days, unless the SEC stops it, the ETF will go live on its own after being launched. They aren't stopping anything with the shutdown either. The next number on the board is 21 shares. The 20-day clock has already begun to run. I compare it to the NFL draft. The countdown starts when one company steps up and files their pick. When Bitcoin's ETF clock began to tick, billions of dollars came in all at once. Let's picture that XRP floodgate opening with less float, faster tech, and built-in world settlement. It's not just another ETF. That's the biggest door that business has ever opened for XRP. Now comes the crazy part. This is not a one-time thing. This is the beginning of a big snowstorm. Because Wisdom Tree just dropped their own power play, while 21 shares is setting the stage. They put in for the CoinDesk 20 ETF, which is a group of the 20 biggest digital assets by market value. XRP is on that list too. This is the second step toward mass acceptance. From ETFs that only hold one asset to groups of digital funds, similar to standard index funds, this is the next step. Watch how Wall Street moves. Like retail sellers, they don't ape into one coin. They list everything. They put together boxes, level them out, and increase exposure. That's what's going on now. The institutional model that helped Apple, Tesla, and NVIDIA become trillion-dollar companies is now being written in blockchain. XRP is in those pages. It's not trading when an ETF basket or fund locks in XRP. That's the market. Never-ending, automatic, and institutional demand. We don't have a guess. We already have more than 24 different XRP ETF files around the world. XRP is no longer just a single fund pick, which is something different. Multiple asset indexes use it as a main key asset. That's how cash grows around the world. As more and more exchange-traded funds and indexes are added, supply is locked up and demand rises. This is already done by Crypto.com with their auto-rebalancing bins. You don't even touch it. It changes to fit you. XRP goes up, it cuts it off. Another coin falls, it buys the dip on its own. This is the way that big markets think. Exposure that is fair, expected amounts of money. More XRP is locked up in the system as they balance. It gets better, though. Canary is now giving hints that their spot XRP ETF might be coming next week. That's right, next week. When that happens, the people who are in denial are out of options. The claim that XRP will never get an ETF goes away overnight, because when one falls, it's like a flood. All of the big security departments, banks, and registered funds get the same go signal. You can now buy, sell, and keep XRP without fear. That is more than just praise. That's the spark. Price finding speeds up a lot. Lots of liquidity comes in. and the biggest mistake in the history of crypto assets is finally fixed. XRP is now worth less than $3, $2.50. You're not getting a deal. There is a mistake in the grid there, and trillions of dollars in institutional money are about to fix it. Listen to what Lou DeMasi, the former CEO of eToro US, said if you still don't understand how early it is. People have been able to buy digital goods before institutions have in the history of the world. Take that in. You're in before the suits for the first time ever. Before there was Wall Street, before there were boardrooms. We will never see something like this happen again. It's early, not surprisingly early. That's the reason the market seems crazy. That's why price changes are so big, because stores were the first to use it, and banks and other institutions haven't fully joined yet. This market will become more developed right away, though, once those ETFs go live and that compliance store opens. The price melts up, the instability goes away, and the liquidity stays the same. The best part comes next. You're already here. This is what you're seeing before the big wave. Every news story you're reading now, every ETF filing, and every coming soon statement is proof. Everything is set up. We can see the rotation starting to take shape right now. Jake himself said it. Right now, there is a big capital change coming up. Every cycle, Bitcoin loses some of its popularity, and the money made moves into different types of coins. This time, ETFs will make that process even stronger. When these funds go live, money won't be going after jokes. It's after infrastructure. This is where everything starts to fit together. What a turn. There is one in every coin cycle. We saw it happen in 2017 when Bitcoin investors put their money into altcoins. Things went the same way again in 2020. Bitcoin hit its highest point, liquidity changed, and altcoins took off. This time, though, the cycle will look very different. Why? Because shopping isn't what's making it happen. It's about organizations. The funds that are putting out ETFs are also in charge of assets worth trillions of dollars. They don't go after hype. They want to make technical gains. If Bitcoin's price goes up less quickly and its ETFs stay the same, where do you think the big money will go next? Right into networks for utilities, right into tracks in the real world. And the first thing on that list, XRP. Jake was right on the mark. He said that ETF holders aren't here to keep Bitcoin forever. They don't believe in this type of product. They're here to make money. They will move to whatever is available if Bitcoin stops making money. That is the turn. That's how this works. And XRP, which can be used on the blockchain and in the real world, will be the next thing that draws capital. It's not a matter of if, but when. Bitcoin has already shown that digital goods can be used to keep money safe. XRP is about to show that they can be used as a core currency. The tracks that move trillions of dollars, not just hold them. Now, let's talk about what makes that spin. Tokenizing things that exist in the real world. People think that term is a trendy word when they hear it. However, it's already taking place. It has to do with putting debt, bonds, loans, swaps, and real estate on the blockchain. Over $100 trillion are worth of those markets in the XRP ledger, which is the payment layer they are building on top of them. Let's look at MasterCard. The XRP ledger is already being used to build tokenized settlement lines. It's not a myth. That's the building blocks. They are literally connecting the biggest debt network in the world into XRP's structure. Quick, easy to set, and ready for regulation. That's the difference. Think about what that means in math terms. Let's say that only 1% of the world's debt markets turn into tokens and move through the XRP lines. That's already trillions of bytes. That's just one market. Debt. When you add in real estate, business bonds, stocks, and even carbon markets, the flood of cash is off the charts. Every market doesn't have to use XRP. It only needs a little. The speed at which the money moves through the ledger does the rest. That's when this really blows my mind. XRP was never meant to be just another cryptocurrency. It was made to be a global layer of liquidity, the thing that holds all digital and real goods together. That's why places like banks and payment providers around the world are trying it out. It has been tried out in Japan, Singapore, the Middle East, and now even the US with tokenized treasuries and on-chain notes. All of those tools need to be able to work with each other. A bridge that lets both sides talk. XRP is the link. People always want to know how XRP went from $2 to $5 to $50 to $100,000. Luck isn't the answer. It's how funding works. As more money goes through the network, more people want the asset that makes it work. In the same way, oil prices go up when the world moves faster. XRP is the digital oil of the world's money. The setup on the blockchain tells us what to do next. So let's zoom in on what's going on inside the maps. Crypto Insight recently used the XRP dominance chart to break it down exactly. Every time the dominance of XRP curves up, accumulation is quietly taking place, and that breakout always goes off very quickly. It changes how people feel about the whole market. The chart looks exactly the same now as it did in 2017. Getting tighter and ready to burst, RSI is curling up and volume is going up while retail is sleeping on it. Things happen again and again. It's not a small move when that breakout happens. It's the kind that changes the whole story of the market overnight. But here's the thing. XRP isn't running by itself this time. It's moving along on institutional trains. Each approval of an ETF, each pilot project for a real-world asset, and each tokenized bond scheme, all of them behave like fuel containers ready to catch fire. This cycle is different from others because XRP's rise won't be driven by speculation. It will be based on real need. Let's take a short break to go over the ETF flow again, as it's very important. Ethereum ETFs are already live. Through the 8A process, we already have Solana, Litecoin, and HBAR ETFs accepted without too much attention. For XRP, the time is the same. And since more than one seller filed, there are 21 shares, a canary, and a wisdom tree. It's more likely than ever that decisions will happen at the same time. As soon as one of these goes live, the other ones fall right away. The SEC can't just approve Bitcoin, Ethereum, and Solana ETFs and keep XRP from being approved forever, even after the law is clear. That's the reason the market is so tight. This is something that every fund manager on Wall Street knows. They can't go out ahead of the public and do it first, but they're getting ready in secret by buying over the counter, using derivatives, and building up private trust. Before Bitcoin's ETF approval, this is the same plan that was used. A slow buildup of cash, followed by a rush of cash when the green light goes off. Right now, XRP is going in the same direction. The bigger picture is the financial internet that is being built in the background. You do more than just reflect value digitally when you tokenize it. You make it able to be moved, programmed, and put together. Now you see how powerful tokenization is. Imagine that you own a house in a different country. Cross-trader settlement used to take weeks, but with XRP ledger tracks, it clears right away. Think of business debt being traded around the world like stocks and being settled in seconds. It's not a dream. These are the things that the biggest banks are making right now. It is the payment layer, and XRP is right in the middle of it all. Can you remember when Bitcoin was just a weird experiment on the internet in 2013? No one thought it could have an effect on real money. It turned into a $1 trillion source of value over time. Right now, XRP is in the same place, but it's not trying to replace gold. It wants to change the way global banking works. In that case, we're talking about that level. XRP's value won't just be based on speculation once that system is solidified. It shows the flow, the speed of money, the number of deals, and the total amount of money that was settled. It is natural for people to want XRP to go up as those numbers rise. That's how the 5 figures work out, and the first signs are already here. Tokenization sandboxes are being built by governments, banks, and asset managers. Japan's SBI is working on adding XRP. Europe's central banks are looking into how distributed ledgers can be used for cross-border payment. The Middle East is trying XRP as a way to send money instantly across borders. These are no longer tests. They're models of how global payments will work in the future. You can feel the harmony coming together. The last few news stories have all pointed to the same trend. It's finally here. Real money is coming on-chain. Everybody's moving toward the same goal, from BlackRock's tests on tokenized funds to Citi's bond payments. On-chain money? That's what Jake meant when he said XRP was made for now. The XRP system can handle tens of thousands of transactions every second, with almost no fees and full transparency. That's what makes it easy to follow. Because of this, institutions can't help but give in. XRP is no longer the what-if coin, it's the when this hits coin. Let's talk about the big picture, which is what makes sense of the picture for 2030. It is thought that by 2030, tokenized assets will be worth between $16 trillion and $30 trillion. That's a more realistic guess. Some models go up even more. It would be huge for the market cap if XRP could just get a tiny bit of that flow, a few percentage points at most. That's before you add in the fact that ETFs lock in supply, institutional tracking soaks up float, and tokenized assets need XRP to move. All of a sudden, you have the right storm. Few supplies, rising demand, and use all over the world. That recipe makes everything different. This cycle is different in this way. It is controlled cash. In 2017 and 2021, there were no rules to stop the chaos. This time, the money is coming from institutions. It's in line. It's okay.